The S&P 500 made an all-time high at 7599.38 on Friday on 29th of May. But the S&P 500 failed to hit the 7600 psychological mark, and for now the S&P 500 has given a doji candle. A doji candle indicates a reversal or the fall, but at the same time the cancellation of the doji candle allows more bullish movement. And also in the previous week the S&P 500 made a history, as the S&P 500 has now given 9 continuous weekly bullish candles. But because of these 9 weekly bullish candles, the green candles, the S&P 500 has hit the absolute saturation, absolute overbought, absolute divergence, and all of these are at the historical levels. And why we have seen this, the bullish rally? It was through a news that was released or that was published by IXIC news. However, we knew that there is no such deal. But still the S&P 500 moved up because on all of these days, Tuesday, Wednesday, Thursday and Friday, all of these days the S&P 500 was holding above the 7500 psychological mark. And the same was mentioned here on Tuesday, that because the S&P 500 is defending the 7500 psychological mark, this is what is actually keeping it bullish or extreme bullish. But even in that case, maximum it can move to the 754x only. And the same we have seen here on Tuesday. Then again on Wednesday, the repetition of the pattern that was seen on Tuesday, again the low was 7499.72 and it instantly recovered and closed above the 7500 and sustained above the 7500. So even though there was a very heavy pressure on the S&P 500 on Wednesday, but still we knew that even if the S&P 500 loses the 7500, in that case, it will recover sharply from the 749x to the 7500. And for the entire day, the S&P 500 will trade in between the 749x and the 753x level. And exactly the same you can see here on Wednesday. But then came the news from Axios on Thursday, 28th of May, and because of that, it moved up even though the inflation data was neutral. It was not positive, it was just neutral. However, what matters now is this, the doji candle and the movement on Monday. That will actually decide the fate of the S&P 500, whether it is going to come down or will continue its bullish movement into the 7600. But now one thing is clear. The next weekly candle for the week of June 1st, it will be a red candle. Why it will be a red candle? Because historically, so far, in last 100 years or so, S&P 500 has never been able to survive or to sustain after hitting the historical peak. And for now, the S&P 500 is so heavy that it won't be able to sustain under its own weight. And even if the manipulation continues, then also S&P 500 does not have much good chances or any good chances that it can hold bullish or hold green on the weekly chart, and it will have to come down. So now how soon we are expecting the S&P 500 to come down? What level will trigger this, the fall, or what level will keep the S&P 500 bullish? What are the chances for the 7600 or even towards the 7700? All of that I'm going to discuss in detail in this S&P 500 weekly technical analysis, which is for the week of June 1st. Means from June 1st, which is Monday, to June 5th, that will be Friday. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. The first part is the technical part, where I will discuss the weekly and the daily charts. And through these the charts, I will tell you the saturation and everything I will show you. Okay, and the impact of that saturation and the overbought conditions on the bullish and the bearish movement. Second part is the probable movement. Probable movement means what is expected to happen in the S&P 500 in the next week, how soon it will come down, what level will trigger the fall, what level will keep it bullish, what are the support and resistance zones, what the technicals are saying, how soon the technicals will cool down, all of that in this the probable movement section. So first I am going to start with the technical part. Now guys, this is the first part of the agenda and this is the technical part. In the technical part, I have divided it into the weekly and the daily charts. Weekly chart means the long-term picture for a month, for a quarter or so, means the long-term trend. Daily chart is the short-term picture. So I am going to start with the weekly chart. So this is the weekly chart and these are the weekly candles. So guys, before I discuss this, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now let's first discuss the weekly candle. Weekly candle means one candle represents 1 week, not 1 day or 1 hour. Now if you notice, in the previous week, the S&P 500 has gained 1.5% in the entire week. Okay, but that is not the big thing. The big thing is that 1, 2, 3, 4, 5, 6, 7, 8, 9 continuous bullish candles, back to back green candles. This is the big thing. And this is historical because after many years, this is happening. And this generally, this kind of heavy bullish movement, it indicates that everything is good and well in the economy. The inflation is down and the rates are down and the job market is very strong, means all of the good things. But in this case, this is purely manipulated case. Otherwise, the S&P 500 was not in a condition to hold and sustain. So now because all of these are conditions, so even though there is like just 1.5% gain in the previous week, and also this candle has formed or has given an all-time high level. This is why it indicates a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday, right? Now this is the last weekly candle of the Dow Jones, exactly the same thing. This candle is responsible, or it has given an all-time high. Okay. Now again the same thing, a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. So through the candles it is clear that there will be the bullish movement irrespective of anything. If all goes well, then there will be a gap up open, and if not, in that case there will be initial or intraday bullish movement even if there comes a gap down open. Okay, so now this thing is clear. Now let's talk about the technical indicators, because the technicals will tell us if there is any more room in the bull side, or if the S&P 500 is now under compulsion to come down. So technically the S&P 500 is bullish through the moving averages, Bollinger Bands and the Ichimoku cloud on the weekly chart. And technically the S&P 500 is bullish through the MACD on the weekly chart, and is also bullish through the stochastic RSI on the weekly chart. S&P 500 is absolute saturated, absolute overbought, absolute divergence, and double saturated, not just one but double saturated, because now there is K equal to D equal to 100 through the stochastic RSI on the weekly chart, and this is the second or the third consecutive week of the K equal to D equal to 100. This means that even though the long-term trend is still bullish or absolute bullish, because S&P 500 is 100% absolute bullish, long-term trend is absolute bullish, but because of the absolute saturation, double saturation, okay, heavy absolute and absolute overbought, absolute divergence, the S&P 500 is under pressure to come down and to come under the profit booking condition in order to cool down the technicals. Okay, this means that the next week, the week of June 1st, there is very high, more than 90 or 95% chances that the weekly candle, that will be a red color candle. Even if initially Monday or Tuesday it moves up, then also it will fall, it will come down to give a weekly red candle. And if you notice, exactly the same thing is in the Dow Jones, absolute saturation, and it is also, Dow Jones is also 100% absolute bullish, but again it is also at the saturation, not absolute, but it is the saturation. But yes, the Dow Jones is at absolute overbought condition, absolute overbought. Okay, in the S&P 500, absolute saturation, absolute divergence, absolute overbought, but in case of the Dow Jones, it is only saturation and the absolute overbought condition. This means that this thing is not just happening in the S&P 500, but is also happening in the Dow Jones. And if you look into the Nasdaq, well, Nasdaq is just like always. Okay, it trades always at the absolute. Okay, not just normal, but the absolute saturation, overbought, etc. Okay, this thing is there in the Nasdaq. So considering all of these conditions in the S&P 500 and the Dow Jones, okay, now there are very heavy chances, 90 to 95% chances that the next weekly candle of the Dow Jones, the S&P 500 will be of the red color. This also means that initially if the S&P 500 moves up on Monday or Tuesday or so, then also there will be a reversal and it will fall in order to give a red candle to trade below 7580.05. This also means that even if the S&P 500 enters into the 7,000 range, then also it will fall back to the 7,500 or even to the 7,400 in order to come out of the saturation and all of these, the absolute saturation, absolute divergence and absolute overbought. Okay, this thing is clear. Now, how soon we are anticipating this the fall? or for how long the S&P 500 can continue to move up. This will be more clear through the daily chart of the S&P 500, Dow Jones and the Nasdaq. So now let's move on to the daily chart to see how soon this thing is going to happen. So guys, now this is the daily chart of the S&P 500. Daily chart means one candle represents one day, not 1 week or 1 hour. One candle means one day. Okay. Now, the most important part is the candle itself. So let's first discuss the candle. This is a doji candle. What does this indicate? Okay. This indicates a reversal, a fall. This candle indicates a reversal or the fall. This candle is just opposite to what the weekly candle of the S&P 500 was indicating. Weekly candle of the S&P 500 was indicating a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. But this candle is indicating, it is indicating a gap down open on Monday, or irrespective of any open and initial or intraday bearish movement on Monday, and also the reversal. But yes, because this candle was responsible and this candle has given an all-time high level to the S&P 500. This is why there will still be the struggle, there will still be the bullishness, and chances of open equal to high are not good or are not much. Open equal to high means immediately after open it comes down. Yes, this can happen only and only if there is a gap up open. Okay, let's say there is a gap up open and then it comes down. Means it has fulfilled this the bullish condition, and immediately after open it comes down and comes into the open equal to high condition. So that will be the case here, otherwise it will not be. This means that now irrespective of anything, okay, there will be some bullishness, but eventually this candle will push the S&P 500 down. This is the last daily candle of the Dow Jones. This daily candle of the Dow Jones is responsible for the all-time high level and is not a doji candle or is not a candle of any other kind, and is indicating bullishness, means a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. On the weekly chart of the Dow Jones also we have seen the same thing, gap up or irrespective of any open and initial or intraday bullish movement on Monday. And also on the weekly chart of the S&P 500 we have seen the same thing. This means that yes, there will be the bullishness on Monday irrespective of anything, not just on Monday but in the entire week. Means even if there is a fall, it comes down, then also it will remain in a condition to recover and to try to recover the key levels like 7,400, 7,500 or the 7,600 because of that condition on the weekly chart through the candles. Okay, now let's look into the technical indicators. And the technical indicators, let's see if the technicals are saturated or not. So technically the S&P 500 is bullish through the Ichimoku cloud, Bollinger Bands and the moving averages on the daily chart. And the S&P 500 is still bearish through the MACD on the daily chart, and this is not good because as long as it is trading bearish through the MACD on the daily chart, there will always be a fear of the sharp and sudden fall. And now because there is already a doji candle and it is already trading, MACD is already bearish, this means there are chances for the fall or for a good fall. Then comes the stochastic RSI. The stochastic RSI is bullish. Other than that, again the same. There is heavy saturation, absolute saturation, absolute saturation, absolute divergence, absolute overbought. Okay, this thing is not good for the S&P 500 because first of all there is a doji candle. Secondly, MACD is already trading bearish. Number 3, absolute saturation, absolute divergence and absolute overbought is not just on the weekly chart but is also on the daily chart. Any more bullishness will add more weight and will make it heavily susceptible for a fall. There is a case of the AI bubble. AI bubble is there, but this bubble is not expected to burst now immediately like on Monday. Okay, it might take some time for means a few weeks or so. Okay, but if someone triggers a heavy fall, in that case, yes, the next week, so not the next week, first week, it will be the second week or the week of FOMC when we can expect at the earliest this bubble to burst. Because for the bubble to burst, a lot of things have to happen. See, if you see there is a very heavy fall of 2 or 3% fall, that is not the bubble burst. Okay, for the bubble burst, there are different conditions. 2, 3 or 4% within a day, that is a normal fall. Okay, that is not the bubble burst. Okay, but yes, whenever the bubble burst, there will be So Nasdaq is going to lose heavily. Nasdaq will lose, as I mentioned earlier, also about 80%, 75 to 80% of its value. Nasdaq will lose. S&P 500 will lose. Okay, it means S&P 500 will not lose 75 or 80%. S&P 500 will lose somewhere around 60 to 70% only, and the Dow Jones will be least impacted. Now guys, let's move on to the next part, that is the probable movement. And now in the probable movement, I will tell you that how we are expecting the S&P 500 to sustain even under this very heavy pressure. But guys, before that, let me tell you that no matter what happens in the stock market, I will keep you posted. I will keep you updated through these daily precise updates which I give to my Patreon community members every day from Monday through Friday. And through these updates, my Patreon community members are very well aware of what is happening, what is going to happen next. And not just the daily precise updates, but also the opportunities in the premium stocks and the mid-week update, which is a video technical analysis. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, and they are getting these daily precise updates and the opportunities and also the mid-week update video technical analysis, and they are very well aware of what is happening and what is going to happen next. And guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page, this is my Patreon profile, and here you will find the membership options. Now guys, I'm going to discuss the last point of the agenda of this S&P 500 weekly technical analysis. And here I will give you the probable movement, means what is expected to happen in the S&P 500 in the week of 1st of June, means from 1st of June, which is Monday, to 5th of June, that will be Friday. So first thing first, there is nothing significant, means in terms of data, there is nothing significant in the next week. Only on Friday, the non-farm payroll data and the unemployment data will be released. However, for now, the S&P 500 or the Wall Street is not considering any negative data. Okay, recently we have seen that inflation data back to back, it was negative, but the Wall Street has not considered it. Other than that, the Michigan consumer sentiments data hit the historical low, but the Wall Street did not consider even that. Okay, this means that if the non-farm payroll data or the unemployment data, if it comes negative, then the Wall Street or the stock market is not going to consider that negativeness. And on the contrary, if it comes negative, then the Wall Street then the stock market can even try to move up, just opposite to what will be there. Okay, through this the data. This is why we will now stick to the numbers, the levels. Okay, these things. So now if you notice the last daily candle of the S&P 500, it's a doji candle. Okay, now technically doji candle indicates a reversal, but at the same time, if the reversal does not happen, okay, at this point, this reversal must happen in a maximum of 2 days or maximum of 2 to 3 days. The reversal must happen. Okay, secondly, there must not come any bullish movement or any good bullish movement, because if these two conditions are not fulfilled, okay, let's say there is a green candle on Monday. Okay, in that case, the condition of the doji candle will be cancelled, means now it is of no use. The reversal that it was indicating, okay, is now not going to happen through the candle, but will happen through some other factor. Okay, but not through the candle, right? And other than that, we are expecting a gap up open on Monday, or irrespective of any open and initial or intraday bullish movement on Monday. But even with this, the gap up open or this the bullish movement, initial or intraday bullish movement, there is no guarantee that the S&P 500 will be able to sustain in the bull direction and will be able to move into the 7,600 range. Why? If you notice on Friday, on 29th of May, the S&P 500 was heavily struggling. It was heavily struggling to enter into the 7,600. And from the pre-market analysis on Friday, okay, and then in the first update and in the midday update, I've repeatedly mentioned that S&P 500, there will be a lot of hesitation, a lot of struggle to enter into the 7,600. And even if the S&P 500 somehow even it hits the 7,600 or enters into the 7,600 0x, means the 10 points range, then also it will fall. This means that even if the S&P 500 try to enter into the 7,600, then also the same principle, the same theory will be applicable. Means as soon as the S&P 500 enters into the 7,600, it will become unstable in the first 10 points of 760x. Then there comes a level in the 762x. Okay, it is a very heavy level, and S&P 500 might not even move or even reach to the 762x and can fall even before that. Why? Again, the same reason: overstressed, oversaturated, over divergence, very heavy. Okay, this is so heavy and historical that S&P 500 will come down under its own weight. Secondly, there is one more thing. If you remember that there was the news. Okay, this news was published by Axios. Okay, and Axios is known for, we know that most of the times whenever there is some kind of manipulation or so, that news will always, or most of the times, will come from this website or this channel. Okay, so now that the president himself has said that there is no deal and there is no confirmation on whether there will be, whether the ceasefire will extend or so. Okay, but it is not, again, it is not about the ceasefire or the war in the Middle East. It is all about the Strait of Hormuz, the shipping. Okay, as long as the Strait of Hormuz is closed, okay, or there is very limited ship traffic, doesn't matter whether there is war or no war, okay, or there is blockade or so, there will be the problem. Okay, and this is actually that will act as the trigger to burst the AI bubble. Okay, so AI bubble is already there. This is real. We all know that AI bubble is there. Now there will be a tipping point, or there will be a trigger. The oil, or the Strait of Hormuz is the trigger. Okay, to trigger or to burst the AI bubble. So now that there is no deal, okay, Strait of Hormuz is still closed. So we will see what happens in the oil on Monday, on 1st of June. Because if oil moves up on Monday, okay, see, exactly the same kind of news, same kind of comments from the president, from the administration, from everyone was here, okay, on 16th of April, and then on 17th of April, Friday, that there will now be the permanent the ceasefire and the Strait of Hormuz will be open. Okay, that was on Friday. Then on Saturday or Friday after market hour, there came the news that there is nothing like that. Then we have seen that oil moved up and heavily and hit the 120 mark. Okay, although there was very limited reaction in the stock market, the S&P 500 and the Dow Jones, okay, all of these, they gave very limited reaction and mostly sustained bullish, but that actually stopped the heavy bullishness. Means this heavy bullishness, unidirectional bullishness, the oil thing, okay, it has stopped in the bullish direction. Okay, this is the movement. This means that if on Monday, if there comes again the impact and all of these, this thing is reversed. And again, if this thing is reversed, then this is confirmed that Axios has heavily manipulated. Okay, this is the news by posting this the story, and then sometimes later we will see that BBC or some other like CNN or so, they are debunking the story that someone has sold heavily hundreds of millions of dollars worth oil contracts, then bought heavily again here hundreds of millions of dollars oil contract, then again the bullish movement in the oil, and they have made tons of money in the billions of dollars. But the most important part is that if oil moves up, okay, from here, this means that in the third time, okay, see, third time means this was the first time it came down, this was second time, this is the third time, then that will be the fourth time. Okay, then in the fourth time, okay, whenever it comes down, then it will be needing the reasons, and it won't be able to hold and to continue in the zigzag pattern that every time it is being manipulated. It was always manipulated, okay, by planting the news, by planting the theory, by the comments. Always sell, buy, sell, buy, sell, buy, hundreds of millions of dollars. And this was not just limited to the oil, but it was also seen in the contracts, in the futures and options of the S&P 500 and the Dow Jones and the Nasdaq. So the stock market was heavily manipulated and openly manipulated. So what I'm trying to say here is that if oil moves up on Monday and continues to move up from Monday onwards, in that case, the S&P 500, even if it wants to move up, even if the manipulators are pushing it higher, they won't be able to push it up any higher, because oil is also moving up at the same time. When the oil is moving up, the 30-year, the 10-year bond yields are also moving up, and then it will come under pressure. The S&P 500 will come under pressure. In that case, it will either move up a little, a little, okay, will hold, or will try to consolidate, or will come down back to the 7,400 mark. So what does this mean in terms of the numbers? So in terms of the numbers, this means that if the S&P 500 moves up, then it is now expected to remain within the 7,600 range and it needs very heavy manipulation, extremely heavy manipulation. Okay, just like always, technically there are 0% chances of any survival or any kind of bullish movement. 0.00% chances. Okay, 100% chances technically are that it must come down. No matter what, it must come down. Okay, now that technicals are not supporting any bullish movement, that is why heavy or extreme and pure manipulation is required. Otherwise this is not possible at all. Okay, so for now it is expected to remain in the 7,600 in the bull side. For the 7,600 to happen, S&P 500 must make a base at the 7,600 psychological mark. It must create a base at 7,600. Okay, means all of the hourly closings, all of the 4-hourly closings, all of the daily closings must be above the 7,600 psychological mark no matter what. Even if there comes a breach, it comes down back into the 7,500, then also it must recover and must give hourly closings, 4-hourly closings and daily closings in the 7,600 range no matter what. Okay, means above the 7,600. Then only it will be able to hold and sustain in the 7,600. But again, what I have shown you on the weekly chart, that now there are like 90 to 95% chances that the next weekly candle, means by June 5th, the Friday, we will see a red color candle, means the S&P 500 will come down and will remain and will close below 7580.05. That was the closing on Friday on 29th of May. Now, when the S&P 500 comes down, then what is going to help the S&P 500 to hold? Okay, in that case, again, there are the levels and there is a very strong zone. This zone is created by my level and also by the trend line. So this means that whenever S&P 500 comes down, then 754x, 5x will be able to handle the fall. And as long as S&P 500 is holding, sustaining at the 754x/5x, this the zone, there will not be any fall, rather there will be chances of the revival, there will be chances of the reversal back to the 7,600. Okay, so this is what is expected to happen. Now what if it loses the 754x/5x? If it loses, closes below, hourly closings are below 754x and 5x, in that case there will be the problem, because in that case S&P 500 will be coming down. It will be forced to come down to test the 7,500 psychological mark. Now this 7,500 psychological mark is very, very important. Why? Because let's say S&P 500 does not hit the 7,600. It never hits the 7,600, but before that it comes down and it comes down to the 7,500. Okay, now it is hitting the 7,500 and there come at least 2 consecutive hourly closings below the 7,500. Then this will trigger a fall. This fall will be very heavy and this fall will be to the 7,400. Although there are levels in the, like the 7,400, 4x is very heavy level. Okay, 7,400 1x is also very heavy level. 7,400 itself is very heavy support. Okay, but still losing the 7,500 means now S&P 500 is not going to hit the 7,600. Even if it has hit the 7,600, it is not going to reclaim the 7,600 again, rather it is going to come down, and the S&P 500 is come down to the 7,400. Because there are continuous hourly closings from 20th of May, this means 7,400 is very heavy. Even if intermediate support levels or the zones, okay, they are not able to handle the fall for more than 1 day. Okay, although they will be able to handle the fall for more than 1 day, but still if somehow they fail to handle and there is very heavy profit booking, very heavy profit booking. Okay, for those who are new to my channel or who do not know the profit booking means that that you were buying and now it has reached to the point from where it cannot move up any higher, and now it is going to come down. So you have put your stop loss. When it comes down, then it will hit the stop loss, back to back stop loss. Then there will be very sharp fall you will see. Why that very heavy sharp fall? Because it is hitting the stop loss back to back. All of the stop losses are hit, and that is the profit booking. Everyone is now booking their profit. They are exiting from the trades. Okay, either absolutely or partially, right? So this means that there will be the profit booking only when there is very heavy profit booking, and S&P 500 fails to hold at these the key levels or the zones, okay, especially after losing the 7500 psychological mark, okay, in that case it will be coming down, and it will be coming down to or towards the 7400. This is where the S&P 500 will be handled, okay, no matter what. This is where the S&P 500 will be handled, because if you notice from this, the last closing, the 7400 is 2.4%, okay. As of now, yes, S&P 500 historically has lost up to 5% within a day, but in this case 2.4% is very, very significant. Why? Because there are multiple strong zones, multiple strong levels, okay. This is why it cannot lose sharply. It can come down but to the 7400, right? And once it comes down to the 7400, it will hold, it will sustain, and then it will recover back from the 7400. There is an exception, and the exception is not an exception, but there is a very important factor. This is on the 19th of May, Tuesday. The low was 7333.68. This was the low on 19th of May, Tuesday, right? Now, if let's say something happens, the like in the Middle East, the war resumes, or the Strait of Hormuz is absolutely closed, no ship is passing through, and the stock market and the market manipulators, they are now booking their profit. It is coming down. Okay, in like 2 or 3 days, it has come down to the 7400. It has entered into the 7300. Now, as long as S&P 500 is holding, okay, whether this is happening on Monday or Friday or next to next week, as long as S&P 500 is holding at or above 7333.68 on the closing basis, daily closing basis, a breach can happen, not a problem, daily closing basis. As long as it is holding in this, the daily closing basis, there will be a very means it will remain bullish, and it will remain in a condition. The S&P 500 will remain in a condition to recover back and to gain the 7400, and then even to try for the 7500. Okay, sharply recover the 7400 and even the 7500. Very heavy recovery, because once the S&P 500 loses the 7333.68, then as per the concept of the stock market, it will come under pressure, and once it comes under pressure, then it will not be able to hold in the 7300. It will be coming to the 7200, okay, very near to the 7200. In the 7200 1x, there is very heavy support zone. Then that zone will be able to handle the fall, okay. And one more thing, for now, any fall, any kind of profit booking or any fall in the S&P 500 will remain limited within the 7000 range. It will remain within the 7000 range or above the 7000 psychological mark. Means even if there is very heavy pressure and there is, there's a very heavy fall and S&P 500 has to come down, okay, then from here to the 7000 it is coming down, there is very heavy fall within 1 week, okay, like 7.5% fall, then also it will remain within the 7000 range no matter what, okay. Why? Because in the 7000 range there are multiple levels, very heavy levels and support zones. Other than that, the S&P 500 needs real reasons, very heavy reasons for or to lose the 7000. Okay, this means that even if there is a condition or there is something like it has come to very near to the 7000, there is very heavy selling for 2, 3, 4 days, it has come very near to the 7000, then also it will be in a condition to recover back the 7000 not 7000 but the 7100 psychological mark. Okay, why? Because there is a consolidation zone. If you notice, there is a small consolidation zone in the 7100. This consolidation zone will not be able to will not let the S&P 500 to come down past to the 7000. It will come down but will hold at this the 7100 consolidation zone. This means that in the next week, S&P 500, the best and the worst case, the best case is the 7600 only, not the 7700. It is so heavy that it will come down under its own weight. Even if the manipulators try to move up and pumps hundreds of millions of dollars, then also they won't be able to save it. Okay, and now they will also be looking to book their profits. So even with the pure or heavy manipulation, it won't be able to sustain. So the bull side will be remain limited to the 7,600, bearish side maximum to the 7,100. Okay, this the consolidation zone. The bearish side will be limited, but before that the 7,500 and the 7,400. For now, we can expect S&P 500 to trade in between 7,600 and the 7,400 under the normal condition, under the normal fall or so. Okay, not heavy fall or not anything, but under the normal conditions. If the situation deteriorates, okay, something bad happens or comments or war or so, in that case to the 7,100, but will remain within the 7,000 no matter what. Bullish side is limited, yes. And guys, yes, there is one more thing. How can we predict the fall, or how can we be certain that there will be the fall? This will be through the Dow Jones. Yes, before that guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then please hit like to appreciate, and your appreciation matters a lot. So now what I was saying is this the Dow Jones means that, see, this was the previous all-time high of the Dow Jones, that was 50512.79, means 50513. Okay, now if or when the Dow Jones starts to give the hourly closings, 4 hourly closings, and also the daily closings are below the 50,513, then we shall be ready that there will be the fall and the profit booking in the S&P 500, because now the Dow Jones is coming under pressure, and naturally these tech indices will come under pressure, and then there will be the fall. Okay, so through the Dow Jones, but as long as the Dow Jones is holding, again the same thing. If the Dow Jones is holding above the 50,513, in that case, no matter what, S&P 500 will fall, but there will be the limited fall, and it will remain in a condition to recover back. Okay, the same will be seen in the Nasdaq, same will be seen everywhere. Okay, so this the previous all-time high of the Dow Jones will tell us whether the fall is real or not, or if there will be the revival in the bull side. But guys, once again, no matter what happens or what will happen in the S&P 500 or in the entire stock market, I will keep you posted through these daily precise updates which I give to my Patreon community members. And if you have not yet joined my Patreon community, then I have given the link in the description of the video and also in the comment section. But guys, still if you have any questions that you want to ask, or if you have any suggestions to improve the S&P 500 technical analysis, then please feel free to tell your thoughts through the comment section of this video.